In this video, we have our returning collaborative friend from Onyx Block, Haas. He is going to go over why altcoins are so important to research. What problem does it solve? What are the tokenomics? Project team, project information, and the last one, what is the social interest? These 5 points are going to make or break a really good business decision. Stay tuned. Remember to hit the like and subscribe button and the little bell. Hope you enjoy it.
Welcome back to the Hair Curler Chronicles. You got Tim and Nancy Danter coming to you from Kitchener-Waterloo, and we're in the kitchen again. And we are so excited to have Haas from the Onyx Block back again today to talk to us about the next phase of learning the crazy cryptic world of crypto. So welcome back, Haas. How are you?
Doing very well. How are you?
Good. This is so exciting to have you back again. I enjoyed our conversation last time about Ethereum versus Cardano versus Polkadot, and I hope for our viewers' sake that they had an opportunity to look a little bit deeper into Ethereum, Polkadot, and Cardano, because it's amazing, and really that's the very beginning. Bitcoin and Ethereum, and then a little bit of Cardano, Polkadot would be the very first steps to get into the world of crypto for sure. I was hoping today, if we could jump back into it, to talk a little bit about evaluating altcoins. Now, on your channel, one of the things that we love about going to your channel is you do a lot on pulling up charts, talking about charts. You analyze things way more than we do on our channel, and that's the thing I love about what you do over in your space. So I was wondering if you could take a few minutes and talk to us about if there's a project or if there's a coin that you are interested in or you hear about from the community. How do you go about evaluating that coin or that project?
I think for me it's interesting because obviously in the YouTube space you're getting everyone shilling all their coins at all times. I constantly have comments of how about this coin, how about that coin, what do you think of this, what do you think of that? You get used to valuing these coins and understanding where things could go right and could go wrong. And a good thing to understand too is, maybe I will be bearish on a certain coin or a certain idea of how the blockchain is going to work, but that might not be what's actually going to happen. So to give you an example, the first thing that you want to look into when you value an altcoin in any way is what problem is it solving? And that could be fundamentally looked at in terms of like Dogecoin, for example. What problem is Dogecoin fundamentally solving? And a lot of people would argue no more than maybe a slight store of value, but the inflationary aspects of Dogecoin really doesn't, make it a viable store of value. That being said, Dogecoin for sure will increase in price. That's without a doubt, as most cryptocurrencies will. But when you look at that compared to a blockchain like VeChain, VeChain is working to track data from the point of a product being created to the point that it's on the shelves, or from the point that a calf is born to when it's on the dairy farm, and what its health is constantly. And then as a consumer what you're buying in your milk or your luxury goods, whatever it is, you're verifying that product within the blockchain. There's a seeable use case. There's a utility in that project. So that's the first and foremost thing that you must look into is what problem does this blockchain solve?
Okay, so that's really good, Haas, with the what problem does it solve? Does it have real use or real world use case? I like that. That makes sense to me. So what would be the next thing that you would look at from there?
Yeah, so the next thing that's very important in a lot of ways to both value the monetary value of a cryptocurrency is going to be the tokenomics. And this is going to include things like inflationary or deflationary aspects. We've talked about how Doge is inflationary, where more Dogecoin is being created. But a lot of blockchains, especially a lot of altcoins, work to having a deflationary aspect, because we know deflation is often better in terms of monetary policy and where we're going. So when you're looking at tokenomics, you're looking at things like the circulating supply and the max supply. So that's how many tokens are in circulation, and then the max supply of tokens. Now, a big important part of that too is where is the token allocation. So a lot of projects, and this is very common for altcoins, is they'll use a portion of those tokens, the initial tokens, to fund the project and to fund whatever blockchain that they're working on. So it's a very common practice, but I would look into how the distribution is being placed, because obviously there are some cases where, you know, the holders are being taken for a ride and the team is just profiting off of what the holders are buying in the token because they hold a massive amount. And we have a couple of blockchains that have that issue. So that's something to be aware of. And then you want to look into market capitalization. So how much money is in the system, or how much is the system worth in total? And both of those numbers, in terms of the circulating supply and the market capitalization, come up with the total dollar amount. So it's important to note when a circulating supply is low, that's when you'll have the token price typically be higher. A lot of people look at a $50,000 Bitcoin and think, well, that's a lot of money. Well, they don't quite understand that, you know, any project with more tokens at a similar market cap would have a less value of a token simply because there are more tokens.
Right.
That doesn't mean that the system is any less valuable. It just means that the tokens are more, so the price is less on the token itself.
Yeah, that's where people get confused, because they'll go, oh, this is a really great buy. It's only pennies. Like they're looking at it like a penny stock kind of thing, but it has everything to do with how many are in circulation at the moment.
Yeah.
Okay, so there were 4 parts of the tokenomics. Was there anything else with tokenomics that they should be thinking about? Those are pretty big ones, you know.
Yeah, I think in tokenomics, when you look at, I would encourage you to look at a project like Dash. You don't have to look into it to buy it or whatever, even though I am bullish on Dash and its use case. But if you look at the tokenomics, it'll give you an example of what I'm talking about, where there's currently 10 million in circulating supply. So it's roughly half than what Bitcoin has. Mm-hmm. And the market cap is roughly 2.6 billion. This blockchain is currently being used in payments in both Venezuela and Colombia. So we know that there's a lot of interest in the blockchain. We know it's actively being used today. So to think that this blockchain couldn't increase in value to roughly 10 to even 20 billion, I think would be fairly easy for the blockchain to do. And then when you look at that, you see the price obviously increase because of that.
That's awesome. And do you consider, as part of your tokenomics, do you consider staking and farming? That's something that's going to go over the heads of some of our newest viewers of this. But would that be part of your consideration is in tokenomics? Is it whether you can stake or farm these coins?
Sometimes. I would say that it's not always the most important thing. There are a lot of tokens that I hold that don't offer any staking or interest. I'm not able to gain any interest on any platforms. But there's a lot of tokens that have that functionality coming down the pipe. A lot of blockchains are moving to more a proof of stake aspect. And as well, once we see like Binance, we see Binance doing great things with PancakeSwap and other staking platforms, and allowing the capability to stake and earn from a yield. But I would say that that's something that's a little bit separate from the tokenomics itself. It wouldn't determine whether or not I buy something as long as the project is good and I see like an upside over the next 5 to 10 years.
Okay, perfect. And we'll get into staking and farming at another time, because I think it's worth having a conversation about. But just for this this conversation, what would be the next thing that you would look at? So you've looked at what real world problem does it solve, and the tokenomics. Then where would you go from there?
Yeah, so I'd recommend either you open up CoinGecko or CoinMarketCap when you're looking at these tokens. From there, you'll be able to select the token and then view the tokenomics that we just mentioned. And then also conveniently on every single tokenomics page of each cryptocurrency, you're going to have a website. Now, you do got to be careful, especially when you get into the lower ranked cryptocurrencies. There are going to be scams and rug pulls down when you get lower, but usually the websites are going to at least help you determine what direction you're going to go, whether you're going to invest in whether you're not. It's important to note that when you do click on the project website itself, any old person can go and spend $240 and get a very nice website done. So you do have to do your due diligence and look a little further in terms of the information. And part of that comes down to the actual project team itself and who is working on that said project. So when you go onto the website, typically you're able to read a little bit about what the project is doing and have a recap of their vision. You'll be able to see things like their roadmap, what they expect to have happen over the next couple weeks. On top of that, most projects should have some sort of GitHub where they're actively producing documents and work showing that they're working on their projects. Not all projects do this, but some do. So it's a good way to keep track of who's actually doing the work. And then you look into things like the CEO, who's the CTO, how old are they? And that's not always that important. And I'm not trying to come at this as an ageist perspective. But the reality is, if I see somebody that's straight out of high school, maybe they're a genius, but maybe I don't want them as a CEO, right? So you really have to put your venture capitalist hat on, especially when you're looking into the websites, and really determine, are you going to buy into their product? Are you going to buy into their vision for what they want for this blockchain? And are you going to buy into that team? So those are all important things to look into when you're looking into a token.
What relevance, if any, do you put into when you're researching the project team into how many are on the, so number one, how many are on the project team? And number two, do you validate who's on the project team and see if they have like a LinkedIn presence or whatever the case is? And that's where you can get sort of the validation of who they are. Do you take that into consideration at all?
Yeah, I'd say so. I'll use an example in terms of one of my cryptocurrencies, Refinance, that had a very tumultuous issue with a couple different exchanges and a very poor deal making in terms of who they're working with, and it's caused a lot of FUD in the area, and a lot of people have exited the project. Or regardless of what people think of the individual project, it's important to put a lot of that blame on somebody like the CEO, who just frankly mismanaged a lot of deals. And he was previously a CTO. He's always been a very technical guy. He is the main developer of the project. So it's growing pains, ultimately. I do believe in the project. I do own the project. But at the end of the day, I attribute most issues with that CEO. When I'm looking into a specific team, I would hope that I can at least get the LinkedIn for the CEO and the CTO. So the CTO, the Chief Technology Officer, that's going to be the person that's basically driving the blockchain development and driving the developers if there are multiple developers on the team. Another important thing to recognize is that a lot of these teams are going to be really small. We're talking about same as .com. Not a lot of people don't have a lot of money. They're starting these projects in garages, in wherever they can, and maybe with a ragtag team of developers across the world. So it could be a team of 2, could be a team of 1, could be a team of 12. It just depends on the funding for the project. But it is important to do your due diligence on both the CEO and the CTO.
Okay.
So would you throw caution to the wind if you saw and you, for some reason, were investigating and researching certain project teams, and all of a sudden you start to see a recurring name from coin to coin to coin? Does that set off any alarms to you, or does that spell diversification to these CEOs or CTOs?
Yeah, I think it depends on the situation, like what's the credibility of those projects. So yeah, I think it really just depends on what the track record is of those projects that they've been involved in. And I'll give a specific example. We have the CEO of BPro, which is a gambling and staking platform working at DeFi gaming, Web 3.0. A very interesting project, but when you look at this individual, the CEO, he has started Poker Markets, which we all see has a lot of attention around it right now. It's making big splashes. He consults with big projects like Poker Starters. He works really hard to integrate projects that are coming through on the Polkadot substrate blockchain, that's being Moonbeam and Kylan. So he has a lot of interaction in the space. He's jumped from project to project. That doesn't concern me. If anything, I'm more bullish on the projects that he does work on, because it seems to go pretty well. I trust him as a CEO and as a developer in pushing products that I believe in. And ultimately, when you're looking at valuing a cryptocurrency and you look at some sort of platform that's going to enable gambling and betting and the like, it's only human nature to think that that's going to do well. So it's interesting to follow certain people.
Okay, so we've got what problem does it solve? We've got the tokenomics. We've got the project team. Is there anything else that you would look at?
Yeah, I think at that point, you probably have a good understanding of what the project is looking like, where the direction is going to go. That's where you're going to validate some of your information that you need. Now, if you're not overly technical, I understand that, but there are going to be good aspects to look into in things like the white paper, if they're available. When you look into the white paper, you want to look at things like the tokenomics specifically in the white paper, and then look at that in terms of CoinGecko. And the reason why I say this is because a lot of times when you look at CoinGecko and CoinMarketCap, especially with altcoins that are way under the rank, I'd probably say sub 200 rank, a lot of times the APIs aren't connected properly and the tokenomics aren't showing correct. So it's a good way to validate what the tokenomics are within the white paper. But also you'll find some interesting things in the white papers, like what the governance structure is. If there is a staking method, how does the staking work? How do the fees work in terms of the transactions? How does the nitty gritty of the blockchain works? A lot of people would look at the white papers and probably a lot of the information is going to go over most people's heads, including myself. But the important thing to get out of the white paper is the specific questions that you might have on that blockchain, and then you're able to validate and answer them within the white paper.
Yeah, and I think this is the step that a lot of people don't go to, and Tim and I are guilty of this too. We don't go to the step of reading the white paper all the time. If we get past the first three, usually we're like feeling quite comfortable with it, and it's kind of silly on some levels that we don't go to at least reading through the white paper. Think about when we go on vacation or we're looking for a place to go on vacation. You read a heck of a lot about these places before you're going to spend $1,500 a person to go to a place for vacation. And yet, we'll throw $1,500 at it, but we won't read the white paper on it, which is kind of silly on some levels. But I think that's the step you and I could get better on, is reading we do the first three pretty good. The third or the fourth one.
Yeah. When you're reading white papers, especially, I wouldn't advocate anyone to go read word for word a white paper. Go to the table of contents, find the key pieces of information that you want to verify, and then go through that. So I typically, myself, I only skim it because you'll get a lot of technical jargon that really only blockchain developers are going to understand. You can obviously verify that with the blockchain developers themselves and see what they mean. But a lot of that information is going to be way over people's heads. So when you look at certain things like the tokenomics, staking structures, or any specific questions that you might have on the blockchain, the white paper is a good place to go. It's not always necessary, but it is a good idea for most times that you're investing a good amount of capital.
No, that's great. And then I think we would agree that there's probably one more that should go in here. And I'll let you say it. It's what's on my mind, but I'm pretty sure you're going to say it.
Yeah, I think with this specific part, and this goes into the things that I do as well, is the social interest in the blockchain. So obviously, if I get interested in a blockchain, the first thing that I do is research it and make sure that it's something that I would invest in. If it is something that I would invest in, I'll probably share it with my subscribers, and at that point, make a video. And that could translate in many different forms. People making Twitter posts or being very active and talking to exchanges to list certain tokens. We see that specifically with BPRO being very pushed in the Twitter sphere to get a Binance listing. Whether that will happen or not, I'm not sure. It would definitely be bullish for the token, but a Binance listing would be bullish for any token. So you do have to look into what is the social aspect and the social influence in terms of this token. And that also goes with the double-edged sword, because you get a lot of cult followings with certain cryptocurrencies that it could be founded because the cryptocurrency is a meme coin or whatever, or it's unfounded and there's just a bunch of people talking about Looney Tunes stuff around a token and giving it a bad name. Both are real, and you have to look past the FUD and also look past the FOMO and look into other content creators as well. You should never take anyone's advice to invest in something. You should never watch my video and invest based on that solely. But a lot of us are making videos to help augment your own research and help you determine whether or not you want to buy a token.
Yeah, no, I agree. And honestly, that's the number one thing that Tim and I constantly say when we're putting out videos is DYOR, do your own research. And honestly, it is because I think it's a fear when you're a person like us putting out content that people are just going to take our word for all these things. We ask a million questions. We watch a lot of videos. We have lots of conversations between the two of us before we're going to jump out and invest in a coin. And I think part of the problem is that people get excited and they go right in FOMO in because they know that this is a great space to be in. It's an exciting space to be in, but it's also a risky space to be in. You gotta have some big kahunas to manage through. Especially the best example is this last week. You have to have we've been pretty steady. We know that this is part of the process. It goes down. We didn't sell anything. In fact, we bought a few things. We looked at it like, oh, a sale.
Mm-hmm.
Yeah, I market sentiment is huge, and it's not for the faint of heart. When you look at my best advice to somebody specifically that doesn't want to think about cryptocurrency but wants exposure and wants to invest in Bitcoin and Ethereum and be happy, and don't look at your portfolio, and that's it. And maybe dollar cost average, set up weekly, monthly payments, whatever works for you. But if you are somebody that's looking at investing in the future of the financial system, looking into altcoins is going to fundamentally be the way to go. It's definitely going to have more use cases over things like Bitcoin, and it's important to value those and determine whether or not you're looking into them. And for me specifically, I'll make videos, and to your point, in terms of do your own research, I'm looking at maybe 30, maybe more tokens a week, based on the comments that I get and everything else, and I'm doing at least 10 to 15 minutes of looking into them, and then once I find one that I really want to dive into, maybe a couple hours into that. And I wouldn't say that that's a lot of time at all. So I absolutely wouldn't base your investing decisions off of anyone doing a YouTube video, myself or any of the big YouTubers. You should always augment that with your own research.
No, and I like what you just said a moment ago, where you said that the altcoins is the future of the financial system. That's an interesting thing. No one's ever said that quite like that before. So is that what you would say? All of these projects are just basically financial projects?
Yeah, well, at the crux of it is, and they're not all financial focused, but they're all going to have a financial aspect tagged onto it. So some of them, like we talked about VeChain, is supply chain focused, but obviously the tokens have value, and they're going to have value because the system is going to increase. So there's a monetary aspect behind it all. But when you look at certain things like the stock market or like world global transfers, central bank digital currencies, they're not going to be built on Bitcoin. Bitcoin can't fundamentally hold that many transactions per second. It wouldn't work with what we need it to work with. So Bitcoin will and always will be the best store of value. But when you're looking at what's going to happen in the next 10 to 15 years and where you want your exposure to be, it's probably going to be in altcoins. Now, that being said, the best thing that you can do for your financial future right now is buy Bitcoin.
Yeah, agreed. This is wonderful. Thank you so much again, Haas, for your time today. I'm telling you, it has been great to learn about you over the internet, and now to get to talk to you in person. I think one of the best things throughout 2021 for Tim and I, even 2020 through the lockdown, is it's given us I've always said this, it's been the gift of time, because we've been able to sit and learn some new things that I would have never done I was too busy doing my 9-to-5 job, running here, there, because your 9-to-5 job is never 9 to 5. It's usually 5:30 a.m. until 8:30 p.m. Then you fall into bed and do it all over again. But learning from folks like yourself, and I think this whole peer-to-peer learning has been exceptionally fabulous for Tim and I in 2020 and 2021. I know we talk about the world of crypto is all peer to peer, but I think the learning from each other is what's fantastic. So thank you so much for coming. Tim's going to pop up the YouTube channel again, is over at Onyx Block. And what you're going to get with Haas is you're going to get more charts. If you're a chart person and you like to look at analysis, then that's
hit the like and subscribe button, folks, because he's Canadian and we like. Better watch what I say in that. we are Canadian, eh? And no, but we just happened to fall upon your YouTube channel, and man, you're one of our favorites now. So because it's simple, it's nice. You don't jump all over the place. It's simplified. And that's what I like about it, ladies and gentlemen. So please jump over, subscribe to the Onyx Block, like it, hit the little bell so you're not missing it. He is not one that puts out a lot of videos, but when he puts them out, they are definitely worth listening and viewing. Is that okay?